Okay, students. Hi, nice to meet you again this evening with Membaca here in an English lesson, especially for the accounting study program. Okay, last week lesson we finished to learn about letters and numbers. And today's meeting, Eka will deliver the different materials about accounting, especially related to your major in accounting. Today's meeting, the topic is about kinds of accounting or the different types of accounting and also the basic principles of accounting. Okay. First of all, when we know about accounting, so firstly, Eka will deliver about the audio that you have to listen. You are going to listen the audio about what is accounting and then what is business, and also what is the managerial accounting. So you are going to know as a whole about some phrases and also some words related to the accounting, about the different types of accounting. There are 10 questions that you have to answer related to the audio of accounting and also for a business. Now, you have to know the 10 questions first here. Take a look on the 10 questions of the audio. Number 1, what is accounting? Number 2, why is accounting called as a language of business? Number 3, what is business? And then the 4, in any business, how many stakeholders are there? Can you mention them? For number 4. Number 5, what is profit? We come to number 6. What is managerial accounting? 7. What is the difference between financial accounting and tax accounting? Number 8. Why do business want to show high profits for the external stakeholders? Number 9, why do business want to show low profits for the governments? And the last number 10, what does GAAP stand for? The 10 questions here will relate to the audio that I delivered. So you have to listen to the audio and then Eka will play the audio twice. So you can answer all the questions here based on the audio. Listen carefully and find out the answers first.
What is accounting? Account means explained. Accounting is thus the process of providing explanations. In providing explanations, the accounting process records actions or events. These are called as transactions. Thus, accounting is a process of providing information about his transactions up a business. It is for this reason as accounting called the language of business. It is a means of communicating information for being stakeholders of a business. What is a business? A business is a set of activities for making profit. Profit is expressed as a number. And this number is communicated with stakeholders through accounting. Let's take a look at Joe's furniture factory. Joe buys logs of wood and processes them at his factory, makes furniture, and sells it to his customers. Joe buys lots of wood at $40 a piece. He spent about $10 in conversion and sells the furniture for $75, thereby making a profit of $25. This is Joe's furniture factory. Apart from Joe, the management and his employees are interested in knowing how much profit he has made. These people are collectively known as internal stakeholders. Joe also has bankers and other investors who invested money in this business. They are collectively known as external stakeholders. Apart from Joe's investors, Uncle Sam has been performing. Thus, the government is a third stakeholder in any business. The internal stakeholders that provide information about business in a language called as managerial accounting. The external stakeholders that provide information or language called as financial accounting. Uncle Sam, the government, who provided information in a language called as tax accounting. Internal user has interested in knowing how the business is doing, for this meaning accurate information. This accurate information is needed for prompt decision making. Uncle Sam, the government, is interested knowing how much taxes argue. Businesses that want to show appropriate picture to Uncle Sam, so that they could probably pay a low taxes. And hence, business show low profits to Uncle Sam. External users are interested in knowing how much profits the business is making. Businesses tend to show a good picture to them by showing higher profits. Businesses cannot use their own method of accounting. These businesses are required to tell language using some standards called as GAAP. GAAP stands for Generally Accepted Accounting Principles of showing little profits. There are standards or rules governing the tax accounting. These are called tax laws. An example of the tax law is Internal Revenue Code. Summary. Accounting is the process of providing explanations. These explanations are given by recording transactions. It is thus called the language of business. In any business there are three stakeholders. For each stakeholder, the type of information required is different, and hence the accounting is different.
Okay, students, after you listen to the audio, can you catch the answers for the whole? Never mind. We are going to show the answers at last after you learn about the text here. Secondly, Rueka will deliver the text about the basic principles of international accounting here. After you listen, and now you are reading. So, in this reading text, you are going to know about some basic principles of accounting. What are they? Apa saja basic principles of accounting? There are 4 basic principles of accounting. Now, you are going to read first about the basic principles of international accounting here. Okay, take a look at the text and then listen to for the pronunciation used on this text. Okay, listen and read the text.
Basic principles of international accounting. International companies can choose how they present financial information to outside parties. The rules and regulations between countries vary significantly. Accountants worldwide are familiar with the words General Accepted Accounting Principles, GAAP. Some of the basic principles are the ongoing principle, the prudence principle, the matching principle, the consistency principle. The development of these principles has greatly differed between countries. For example, in most English-speaking countries, it is often accepted practice to offset unrealized gains from unrealized losses, or to revalue long-term assets upwards, provided sufficient proof of the current value can be shown.
Okay, students, after you read the text, so have you found the basic principles of accounting? Okay, and then have you found about the abbreviation of GAAP on this text? Okay, so you can answer for number 10 questions on the audio about what does the GAAP stand for. Okay, so GAAP. You can answer now. And now we come to the 4 basic principles of accounting on this reading text. Those are 1. The ongoing principle. And then, secondly, the prudence principle. The third, the matching principle. And the consistency principle. And now, after you know about 4 basic principles of accounting, you are going to match now. You are going to match with the principles and the definition of each principle. Whoever will put here will put the definition of the basic principle of accounting, and then you are going to match them with one basic principle, which one is suitable with the definition of the basic principle. Anda sekarang berlatih untuk memadukan antara 4 dasar akuntansi dengan definisi dari salah satu prinsip dasar akuntansi tersebut. So, from 4 on the text, you are going to match each of them with the definition I gave on this video. So, how about this definition? Which one is true based on the 4 basic principles above? Okay. Number 1, this principle is concerned with the timing of the recognition of transaction in the accounts. Items are recorded when the income or expenses arise and are not dependent on the movement of cash. Now, please, from this definition, you are going to match it with the 4 principles above. Which one is true? We come to number 2 now. When preparing accounts, one must assume that the enterprise will still be viable in the years to come. Practically, all accounting items are affected by this assumption, such as the carrying value of fixed assets and inventories and the ability to repay debts and other obligations. Okay, based on this explanation, which principle is related to this definition? Now, we come to number 3. Number 3, what value should be given to a number in the accounts? It is normal to act pessimistically so that the profits and assets are not overstated, and expenses and liabilities are realistically valued. Okay? Now try to understand for this definition and then match it with the principle of accounting. The last number for number 4. Account should be produced using the same principles from one year to the next. The deviations from the principles must be noted, and the effects of the accounts are shown. Which one or which principle is related to the fourth definition? Okay, students? Now it's time for you to answer by matching the basic principles of accounting with the definitions I deliver to you. Okay, now it's time for you to answer on the comment below about the basic principles of accounting. You are going to learn too about some phrases that still unfamiliar for you. And now it's time for you to learn about some unfamiliar words. Yeah, we prepare here some phrases and some words in Bahasa Indonesia, so you can understand about the audio. For the first audio, to answer the 10 comprehensions based on the audio, this is the phrases. This is for our learning today. Don't forget to put comments for the answers of matching the definition of the basic principles of accounting. Okay, students, have a nice learning. If you still have any questions, please deliver your questions in WA group. Don't be shy to us, because this is time for us for learning together. Okay, thank you very much, and see you again next week on the different material. Wassalamualaikum warahmatullahi wabarakatuh. Bye.